Morning. As always, we are on the euro against the US dollar on the 4 hour time frame. So we're going to be diving into the daily chart. So yesterday the euro moved slightly higher based on its opening and closing figure. But as you can clearly see, there are some very nice wicks here, which is essentially the Fed's interest rate decision. As a small recap, the Fed cut interest rates by 50 basis points, the first time since 2020, and that was before the COVID pandemic, or it was during the COVID pandemic. Overall, it was the last time was 2020. So essentially, this candle here, the euro gained the US against the US dollar once that 50 basis point cut was announced. So you can see it moved higher. Then Fed Chair Powell's press conference began. So this is the 30-minute, and if I'm not mistaken, this was the release. Yes, this was the release of the Fed's interest rate decision, and then this was Fed Chair Powell's press conference statement, upon which you can see that the euro moved in a downwards trajectory. So these are the 30-minute candles, decision, then the pressure by Powell. So Powell in his press conference was more hawkish than we had expected, but it did make sense. So yesterday we discussed the two possibilities for the Fed. One was a 25 basis point cut, which I was wrong, and the Fed did cut by 50. Now, what we did say yesterday was that if the Fed does cut by 15, they would need to justify the 50 basis point cut as not being concerned about a potential recession in the US economy. So Fed Chair Powell's comments of being this is not the given, etc., was hawkish in nature, and thus the euro against the US dollar moved in a downward trajectory during that press conference. But as you can see today, it's recouping those losses made during yesterday's trading session. Overall, we can keep our support and resistance levels at S1 at 1.110 and then R1 at 1.1200. Not really that big of a need for us to change those support and resistance levels, despite this very nice candle being formed. And the reasoning is this was an extreme event. So this was the Fed's interest rate decision, then the conference, and then the press conference, and then it moved higher. If it does come back down, I would hypothetically expect that there might be some support at 1.110 rather than at this point here. So the first level of support would be at S1. Other than that, we have S2 and then S3. Now, for today, we are going to be discussing the BOE's and BOJ's interest rate decisions. So the BOE later on today, the BOJ in tomorrow's Asian sessions. Of course, we're going to be looking at Deutsche Bank, potentially at Commerzbank as well. Volkswagen, who announced that it would be stopping one of its electric vehicle productions, if I'm not mistaken, in the US. So that news was announced a couple of hours ago. Still bad for the company stock price. Less production means less sales, which could in turn imply future revenue is reduced. But we'll get there in a couple of minutes. For now, we are keeping that support and resistance levels. For the euro, I am maintaining a bullish outlook now due to the fact that the Fed has begun officially its rate cutting cycle. As such, euro against the US dollar appears to be moving in an upwards fashion. Simply look at the RSI indicator below our charts. It is at 65, which does imply a bullish market sentiment. However, for that bullish market sentiment to continue, I would require a clear break above R1 at 1.120. USD JPY. So we do have Japan's CPI rates, which are set to release during tomorrow's Asian session, and we are expecting those to be released before the BOJ's interest rate decision. Should they showcase inflation moving towards the bank's 2% target in a sustainable manner, then it could amplify the calls for the BOJ to continue hiking. However, the majority of market participants are anticipating the bank to remain on hold. But last time, they were expecting them to hike by 10, and then they hiked by 15 basis points. So there is some room for the BOJ should they wish to take the markets by surprise. But looking at the chart, we are seeing that the yen is strengthening against the US dollar. I would not be surprised to see the BOJ remaining on hold. They do want the yen strengthening, but not as much. So it does appear to be falling into what the bank would like to see. The downwards moving trend line is about to be violated. Look at this daily candle right here. We drop down to the 4 hour time frame. It has broken above, but look, and now you can see the importance of placing support and resistance lines on daily and 4 hour time frames. So using that higher time frame analysis. We had seen that R1 was at 143.45. So we placed that on the daily chart. It has wicked slightly above, but still remains below. If you drop down to the 4 hour chart, however, voila, R1. Very nice. It didn't close above and close below. It did wick above, yes, taking out everyone that went short around here, but it does appear to be a valid resistance level. So it can be used on a 4 hour time frame as well. But back to the daily chart, having broken slightly that downwards moving trend line with RSI currently moving towards 50. That's actually at 41, so it does imply a bearish market sentiment. There are two scenarios that I would see. One is a sideways bias between S1 and R1. And I would not be surprised to see that on the 4 hour time frame, not on the daily, on the 4 hour. We do have the BOJ's interest rate decision tomorrow. So it's moved slightly in upwards fashion, but the Fed is cutting, but the Fed cut by 50 basis points. So I would maintain for today a sideways bias between S1 and R1, so 140.15 and 143.45, so S1 and R1. Now, following the BOJ's interest rate decision, that might change. So then the daily chart would come into play. For now, sideways bias between S1 and R1. On the daily, though, with R1 being at 40, it does imply a bearish market sentiment. So, from a more macro perspective, one could be bearish for the dollar against the Japanese yen. Whereas on the 4 hour, we would actually maintain that sideways bias up until the BOJ's decision in tomorrow's Asian session. For now, though, the S1 and R1 support levels do appear to be valid, so have been validated before. Same with R1, tested and validated today. So R1, R2, and R3. I do need to change that text label for R3, though. It's not 129.65. It is 149.35. So those are my resistance levels. Yes, I would be paying more attention to the bank's accompanying statement in terms of the BOJ in tomorrow's Asian session. I think they might be slightly hawkish, so implying that they will hike in the future, but simply just want to see how the markets move. So we could see some yen strengthening in tomorrow's Asian session. British pound against the US dollar, currently breaking above that R1 level of 1.3260. The BOE's interest rate decision is set to occur during today's late European session. So if I'm not mistaken, it's about 2 p.m. GMT plus 3, which is at around, well, since we're in the UK, it's 2, so at around 12 p.m., 12 a.m. if you're in the UK. But looking at the technical analysis, so that is interesting. It is resting on the mid-range of the Bollinger Bands. It has broken above this R1 level. So this is resistance now turned to support. We are on the daily time frame as well. Let's drop down to the 4 hour. Voila. Same thing we discussed before. Daily time frame, resistance. 4 hour, opened, closed and open on that resistance now turned to support. So you can use the support and resistance levels on a 4 hour time frame as well. You can draw them on the daily time frame and then drop down to the 4 hour to see how they react and to see if they are valid. On the 4 hour, you can see that the RSI is actually on very close to 70, which does imply a strong bullish market sentiment. On the daily, you can see that it is above the mid range of the Bollinger Bands, which further tends to supply a bullish market sentiment as they are tilted towards the upside. Same with the 50 and 100 moving averages. RSI also on the daily close to 70, currently at 65, which does imply a bullish market sentiment even further. So I am changing these support levels. This becomes S4. S3 becomes 1.2890. So same issue with the BOJ. The BOE is expected to remain on hold. So attention turns to the bank's accompanying the bank's accompanying statement. If it is hawkish in nature, so hesitancy from BOE officials to cut interest rates, then we might see the British pound strengthening. But following yesterday's 50 basis point cut by the Fed, overall I would be maintaining a relatively bullish outlook for the British pound. So cable, we are bullish. So R3 becomes R2. And now we do need to find our new R3 resistance line. So having seen this, one could draw an upwards moving trend line as well from this bullish candle. So confirmed from this bullish candle's wick. So this is indeed an upward swing trend line. So as we said, you need 2 points of contact for an upward swing trend line to be established, and the third for it to be validated. So this is an upward swing trend line. We would like to see another third touch for it to be valid, but it has been formed. So it does appear to be moving in an upwards fashion. Now we do need to find our three. So we need to look at the historical data between the British pound and the US dollar. Note how we're taking these highs. We're finding levels upon which there was significant resistance or support. And just glancing, I can see something occurring around here. The distance between R1 and R2 is 190 pips. So we would like to see something similar between R2 and R3. That's 228 pips. So this prior high, we had one, two, three, four touches, acted as support, turned to resistance. Let's see. And then the distance between R2 and R3, 190 pips, almost good enough. So target for R3 is at 1.3825. So that is our R3 resistance line. We will be looking at gold as we do have to discuss the most recent developments between Israel and Hezbollah in the Middle East. So that is an issue as well, also impacting oil. So we do have to discuss that, and we will be going to those charts in just a moment. So this is my R3. I have my S1, S2, S3, S4, and my resistance levels. So as a small recap, it does appear to be moving in an upwards fashion. If the BOE is hawkish as well, could further support that bullish outlook, potentially taking aim for R1 during today's training session at 1.3435. USD CAD, oof, ouch. It has broken that upwards moving trend line, which we had placed, if I'm not mistaken, 2 weeks ago. I do need to readjust that R1 level though, as it was violated, broke above, wick lower, has now cleared that upwards moving trend line. We are bearish for the US dollar against the CAD. So two factors. One is the Fed. So as usual, and as I'm going to be saying throughout all these pairs, 50 basis point cut, weighing on the greenback, allowing other pairs to capitalize on that dollar weakness. Moreover, tensions in the Middle East, increasing oil prices. Look at the crude oil chart, upwards. It's nice as well. So Canada is an oil exporting nation, thus further supporting the loonie. So two factors supporting the Canadian dollar. One is geopolitical tensions. The second is the weakening of the US dollar. I am going to be placing my resistance level just slightly higher at 1.3610, rounding that up. Now, one might ask, why am I not using these wicks? This is a bit nicer. Look at the closing of the bullish and the opening of the bearish candles. These wicks did go through, but if you look at the prior history, let me just insert a rectangle so that it's easier for you guys to see. Simply look at the price action which is shown by this rectangle. Starting from the left of your screens, resistance. Validated on 3 occasions, tried to pierce through, failed. When it did manage to break through and move higher, acted as support. Still support, still support, 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 broke below, resistance, then resistance. So this is indeed a resistance level at 1.3610. 610. R2 and R3 remain the same. Same with the support level. Now, for a bearish outlook to continue, it would need to break below 1.3475. If it bounces off that S1 level, we would switch for a sideways bias. But based on the recent geopolitical tensions and then the Fed's interest rate decision, I would be bearish for the dollar against the Canadian dollar. If it does break below that S1 level, my next target would be at 1.3340, the next possible support line. Moving on to the Aussie is continuing in its upwards ascent, having broken above that 0.6795 R1 resistance line. which is now resistance turned to support. Next target for the bulls could be at R2, 0.6870. That is my R1. Aussie gaining. Australia's employment data coming in better than expected, exceeding expectations, implying a resilient labor market in Australia. For tomorrow, we would also like to note the PBOC's interest rate decision. I would I would assume that they may cut them in order to support the domestic economy. I've been saying this for quite a few months now. I am still concerned about the resiliency of China's economy. There are issues. The recent provocations against Japan are a sign of strength. Still a concern, but still, keeping it from an economics perspective, if China, so the Chinese government, takes measures to support their economy, the Aussie might benefit as well. Very close trading partners with China, demand for raw materials, and in particular, steel, if I'm not mistaken. Nevertheless, if China, if China's central bank lowers their interest rate to stimulate spending in the economy, could provide support for the Aussie. And then once again, the Fed cut, the Aussie is gaining weaker dollar, good employment data, and if China tries to support their economy, could further support the Aussie against the US dollar. I do need to find a new R2 resistance level. And the issue I am currently having is that R1 level is further apart from that R3 resistance line. I am keeping R3 because it is a significant amount in terms of pips from R1. But if I'm looking at that S1, I need to readjust S2 now. Taking this lower point, I need to move that S3. Right. So I need to readjust S1, S2, and then I'm going to see with R1 and R2 and R3. This was a prior high, broken. Taking aim for 0.6870. If it does retrace, support 0.6795. If it manages to move below the next support level, 0.664, which is this line here. And then I need to bring that S3 slightly higher, a bit too far away. I'm looking at this price action here, managed to break above, it does come back down, could find support. So these are my support levels now. Lower than that, one could actually even place another support line here, but the way it's moving, support here, second, and then the first line of support. R1 we have, and now we need to find R2. The old price action doesn't really help that much. So the distance between S1 and S2 is 140 pips. Distance between R1 and R2, 150, so that's 10 pips. So we can keep R2 and turn that into R3, we can turn that into R2. What's the distance between this high? 140. Take this whole time. Resistance moved lower. Justification for that R3 level. So since we've readjusted our support levels, then we can readjust those resistance levels as well. 0.6535. So that is S3. 0.6645 as my S2 support line. The RSI is above 65. Bullish market sentiment, upward moving trend line. It's quite steep, but still valid. So we are maintaining a bullish outlook for the particular pair. And then this is my R2. Then for R3, 0.715. But if I put it at 0.715, is that still on the peak? Coinciding with this wick of that bearish candle, 0.7155. Turn that from green to red. So we are maintaining a bullish outlook. So we're done with the Aussie. Just against the Swiss franc, continuing in that downwards motion. If you look at the S&P 500, moved lower yesterday. For today is up. Futures are nice, taking aim for that all-time high figure, maintaining a bullish outlook for the S&P 500, but it does need to clear the all-time high figure for that bullish outlook to be maintained. S1 at 5,577, R1 is 5,720. Next potential resistance is at 5,850. But overall, does appear to be moving in an upwards fashion. Let's look at the Dow Jones 30 as well. Has cleared that R1 level. Note it did find resistance, broke above. All-time high figure just about to be made. Let's look at it together. Just shy of that all-time high figure. Dow Jones moving in upwards fashion. Same with the Nasdaq. Same with the S&P 500, and in theory, should be the same for the Nasdaq 100. Let's see. Still, target is R2. Hypothetical resistance at 42,600 for the Dow Jones 30. Crude oil. So it's taking aim for our R1 resistance line of 71.14. And now we begin with the geopolitics segment of today's live technical analysis session. It is technical analysis, but we still need to discuss the fundamentals. Yesterday, according to reports and accusations from Hezbollah, Israel has blown up radios, pagers, etc., within Lebanon. That is increasing tensions between the two. Israel appears to be moving forces towards the border. There appears to be have some retaliation from Hezbollah as well. So increasing tensions in the region, which increases concern about the supply chain of oil, boosting oil prices in an upwards fashion. The RSI is currently on 50, but we do have an upwards moving trend line. And if it does clear that R1 resistance line of 71.40, upon which we had this descending triangle as well, note first, a second touch, but we did have lower highs and then broke below, which we had mentioned, if I'm not mistaken, a couple of weeks ago. If it breaks above R1, bullish outlook, upwards moving trend line, RSI breaking above 50 would also support that hypothesis, but we do need it to break above R1 for our bullish outlook to be maintained. Moving on to gold as well, 2,590 has been broken. The all-time high figure was 2,599, so that is our R1 resistance line currently. Gold does appear to be moving in an upwards fashion as well. Add in the geopolitics and then the Fed's interest rate decision. So weaker US dollar could allow for the precious metals price to move in an upwards fashion as well. Support is at 2,530 as 2,470. So essentially these text labels that you can see on your screen, support and resistance, support in green, resistance in red, breaks above 2,499. Potential target for the bulls could be 2,650. Until the stock price, sideways fashion between $18.90 per share and $22.10 per share, support and resistance. Microsoft bouncing off that R1 resistance line of 437.90. Target for the bears is $425.05 per share. Still, I think this is a retracement, and we are maintaining our overall bullish outlook for the company's stock price. I have placed the R1s, the resistance and support levels, to the right of your screen. So simply have a look at those text labels. Overall, swing high. We would like to see the formation of a higher low, so higher than this point here, for that bullish outlook to be continued, and higher above this upwards moving trend line. But for now and for the day, could be moving in a downwards fashion once the stock markets open. Nvidia, not looking at it good. This was a 30-minute time frame. Target could be at 106.38. ExxonMobil, remaining within that sideways moving channel, slightly bullish, but RSI, if it stays and remains flat at that 50, could re-enter the sideways moving channel between 113.13 and 119.53. What have we done? So the Nasdaq does appear to be moving in an upwards fashion. So this is a weekly chart as well. Daily moving in upwards fashion. Bullish, still bullish. It would have to clear that R1 resistance line though at 19,995 for our bullish outlook to be maintained. If it fails to do so, sideways bias between S1 and R1. The FTSE breaking above that R1 level of 8,330. Upwards moving trend line still valid. So as we had said, could be a bullish triangle. Target might be 8,480 and then higher than that, 8,620. If it comes back below and breaks below this upward swing trend line, sideways between S1 and R1, and of course, if it does break below S1, potential target for the bears might be 7,990, as you can see to the right of your screens, which are our support and resistance levels. And now move on. Tesla, despite these three bearish daily candles, sending triangle, finding resistance at $233 per share. And then for support, this one is 2 and S3. And then I can see that they aren't that clear on your screen, so I will add those text labels in, make it easier for you to see where I've placed my support levels and resistance respectively. I'm at 38.15, so I'm turning that to green. That is S3. This low point here. Then for S2, 167.08. That is where it found support before moving higher. As you can see around here. And then 204.09 as my S1. Resistance is where it's meeting currently resistance at 233.09. Then for R2, 271.27, which is this high that was formed around here. So it seeked, found resistance, and moved lower. Then for R3, 299.02. So we are maintaining a slight bullish outlook for Tesla's stock price as long as this upwards moving trend line is not broken. If it is broken, then we might see the Bollinger Band smoothing out, RSI staying to 50, and the company stock price staying between S1 and R1. If it manages to break above, the next potential target for the bulls could be at 271.27. And now let's see Louis Vuitton, LVMH. So for those of you that do watch our lives on a daily basis, you might remember that we had placed this as one level a few weeks ago as well, and it has now been validated. So we were correct with that. There's one level of 594.54. The RSI appears to be recouping, but still not looking that good for the company stock price. If it breaks above our one, however, then yes, maybe we could opt for a bullish outlook, but this might simply be a retracement before continuing on its descent. But it still did find support at 594.54. Lockheed Martin, Airbus, Volkswagen, moving in an upwards fashion. Upwards moving trend line still valid. There is a bit of an issue with Volkswagen though. If the media reports are true that they are going to be halting their production of forgotten their car in the states, as we said during the beginning of this live technical analysis session, less sales could lead to lower revenue, might be bad. Still, the technicals breakup of 50 might be slightly bullish for the company stock price, but I'm still concerned from a general perspective on the company stock price. Google, nice. Might seek some support again at 156.83, so we're looking for it to test that support level before continuing higher. Deutsche Bank has actually just broken above that R1 level of 15.10. If it closes above on the daily chart, my next target could be the potential resistance at 15.85. And that is predominantly it. If there's anything else, let's see. Let's see if there's something that we can do that we don't currently have. IBM, ExxonMobil. We've done ExxonMobil, we already have ExxonMobil. Uh, Coffee, sugar, coffee. For closed. Mhm. What might be interesting, JP Morgan. JP Morgan. So we are going to be doing JP Morgan. There are some news reports that JP Morgan may be taking over the credit card business that Apple had with Goldman Sachs. So that agreement that existed, and then Goldman Sachs decided to exit the consumer lending sector because it wasn't really that profitable. It looks like JP Morgan might be picking that up from Goldman Sachs. So we are going to be placing support and resistance for the company stock price. So the parameter, so that S1 level is 207.50, which is currently upon which the stock price is currently at. Lower than that, I'm seeing support around here on three different occasions. It's nice. And then the swing low, that is my S3. For resistance, I will be placing this high here. That is one. The second is on this gap here, and then the third would be just below this bullish candle, finding resistance. Look, support slide, did wick below, resistance. Took everyone that went short, and then moved low. So it seeked that liquidity. So 17.90. I do need those text labels. Is there an upwards moving trend line somewhere? Maybe one here, but still. RSI has dipped below 50. I would maintain a bearish outlook for the company's stock price unless this is a diverging triangle. Nonetheless, I'd say this is an hour chart. That is my mistake. Oh, 4 hour as well. Looks nice. We can use the 4 hour. We can use those, I'd say, resistance and support levels on the 4 hour as well. Yeah. Below, bearish. If it breaks below that S1 level, next target could be S2. If it breaks below that upwards moving trend line as well, bearish outlook. If it bounces off, you might be seeing the beginning of an upwards momentum, but it is at the mid range of the Bollinger Bands. Check out the timer. This might be a bear flag, but a bear flag has highs, lows, highs, lows, highs, lows. So not really a bear flag. But still, if we go back to the 1 hour time frame, let's just place it there. Bearish for JP Morgan's stock price, at least for today. We'll have to see if there is anything new just set to released. 207.50, 203.70, that is S2, and then S3, 200.54. for R1 to 9.88. To 9.88. Then 214.07. 217.90. 17.90. So these are the support and resistance levels for JP Morgan on the 1 hour time frame. And now, before we actually close, I would like to say a couple of things for the Fed's interest rate decision. A 50 basis point cut is nice. It provides support for the US equities markets. You've seen that on the S&P 500, the Dow Jones 30, and the Nasdaq. But the issue I still have with a 50 basis point cut is if you look at Fetcher Powell's, look at the bank's accompanying statement and Fetcher Powell's press conference, they're implying that the U.S. economy is doing fine and that their main concern is now the labor market. If the U.S. economy is okay and is resilient, then what's the point of a 50 basis point cut? Why not cut by 25? Reduce the risks of inflation coming back and then having to remain on hold for a prolonged period of time. And then you have a strong economy. The labor market should fix by cutting by 25 basis points. Could encourage more companies to hire people, reducing that unemployment rate, which appears to be of great concern to the Fed. By cutting 50 basis points, that for me is more concerning. I think they were A, very afraid about a potential recession in the US, or B, they were behind the curve and they were trying to get ahead of it. Nonetheless, that is it for today, and if I'm not mistaken, for this week as well. Thank you all for tuning in, and we will see all of you next week. Goodbye and take care.
Let's go ahead and get started. So for those who have just joined us, welcome to today's webinar. Today's session will be the third part of our Fibonacci series, and today's session will be on expansions. So let's go ahead and before we get started, as usual, a risk warning and disclaimer. So the our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. So we'll briefly go through a recap on what we've talked about recently, the past 2 weeks on Fibonacci retracement essentials, so what exactly you can look out for, and what constitutes an ideal market structure, so what exactly are significant swings, and what exactly are the market trends that you should be following. And then we'll look at the different Fibonacci retracement levels, and then we'll get into this week's Fibonacci expansions technique, followed by how we can combine what we've learned previously with what we're going to learn today, and combine them to form confluence levels. Okay, so let's get started with our Fibonacci retracement checklist. So some essential steps. Firstly is the market structure clear. So we want to look for big zigzags or big price movements. Secondly is to identify the recent trend, so are prices going down or up. And thirdly, we want to look for recent major swing lows and recent major swing highs, followed by connecting the two extreme points, so the highest and lowest, or the lowest to the highest point, if it's an uptrend. Okay, so let's look at what exactly constitutes a significant swing. So firstly, here, let's look at an incorrect example. So here we have insignificant swings. So you can see in the example here, these swing highs and swing lows are too insignificant. So they're too insignificant to use as Fibonacci points. Okay, because the price movements are too small and there's no significant price movements. So here's another example. You can't really see any significant shape. Okay, and here we have a significant example. So you can see that there are obvious peaks and troughs in our example here, and we've drawn it out. And there's also clear market movement. So this is the kind of market structure that you want to look out for when you are deciding which charts to trade. Okay, again, another example over here. Okay, next, let's look at how you can follow the market structure. So in this example, you can see that the Fibonacci trend line, which is basically the line that we've drawn here, cuts through the price structure and doesn't follow the shape of the chart. So Fibonacci retracement levels should not cut through too large areas of the market structure. The Fibonacci trend line should follow the shape and should not deviate too much from price movement. Okay, so what you should do is, like in this example here, where we're following the clear downward movement of the trend, and the Fibonacci retracement trend line follows the price movement. And this tends to work better on higher time frames, so H1, H4, daily, weekly, depending on your trading strategy. Okay, again, here's an example of a clear market structure, and this is an example of an unclear market structure. Okay, and here are the different Fibonacci retracement levels. So the negatives are what we are going to be looking at today, which is the Fibonacci expansion. And then previous weeks, in our first session, we went through Fibonacci retracement, which would be from 0 to 100. And then those that are above 100, so 127.2 and 161.8, those we talked about last week when we talked about Fibonacci extensions. Okay? And yep, so here's an example of it on a chart. So here you can see all the different Fibonacci numbers that we mentioned in the previous slide and how exactly it looks drawn out. So you want to firstly take note of the starting and the ending point of our Fibonacci trend line. So you can see the starting point is up here, ending point down here. Okay, and as we mentioned, mid-range are the retracements. Negative range is our expansions, so what we'll be talking about today. And those that are more than 100% are the extensions. So in all these three scenarios, we are only using one tool, which is the Fibonacci retracement. Okay, so let's zoom in and look at today's Fibonacci expansion technique. So before we get into that, I just want to introduce to you guys a website that you can use if you're just starting out on Fibonacci techniques. Okay, so you can go on to the forexarmy.com and it teaches you how to draw the Fibonacci retracement correctly. So it goes through, there's a video as well on each of the techniques, and then you can look at what you can look out for. Basically everything that I'm going through today, you can also find on this website. Okay, so yep, there's some examples here. Okay, and they go through each of the Fibonacci as well. So you can see here, they're talking about combining the Fibonacci levels, which is what we'll talk about later on when we're talking about Fibonacci confluence levels. Yeah, and here we're talking about how kind of trade management strategies. So you place your stop loss beyond, take profit before. So this is quite an important concept that we'll talk about at the end as well. So yeah, just wanted to briefly mention that if you're just starting out, and yeah, maybe I'll just pop it into the chat. Okay, let me go back to my slides. Okay, so let's zoom in to this week's topic, which is Fibonacci expansions, and we're just going to be focusing on the negatives today. So using the Fibonacci retracement tool, we are making use of the negative levels, namely minus 61.8 and minus 27.2. So when using this tool, ideally we look for this flash, zigzag, or lightning symbol. Okay, so price should retrace at least 50% in point 3 as shown in the video here before reversing off. So you can see in the GIF I've included here. Okay, our flash symbol is drawn out in yellow, and you're taking the starting and ending point, or point 1 and point 2, and we are observing the negative levels. So of course the first level we'll be observing is minus 27. So if price breaks out of the minus 27.2, then we would go on to look for the minus 61.8. But it's important to note that this 0.3 here should be more than 50%, which is over here where my mouse is at. Yeah, it should surpass that level before you can use this Fibonacci expansion technique. Okay, maybe I'll just pause here and let you guys watch the GIF a couple of times. Okay, so here you can see it's retraced even more, almost 76%, okay, before bouncing off and heading towards our 27%, 27%, and retracing off of that level. Okay, so here's our first example. So here we can see how exactly it plays out. We have a starting and ending point here and here. Okay, and we can see the price retracing 61.8% of the retracement that we've identified. And then we see how to make use of the support in the negatives. So here you can see we have a minus 27.2 that we're observing. So we're expecting price to retrace back here, and we're expecting it to bounce off of this support level, which you can see in this example it did do. Okay, so typically once price breaks out of the 0%, that is confirmation that it's gonna hit towards your minus 27.2. A pro tip is that price usually does come back to the ending point, so the same level over here, and it might test that level since it is now a overlap support or resistance level. So basically, what a overlap level means is that if there is a swing low as well as a swing high that lines up in the same level like we see over here at this red highlighted area. Okay, so how you basically use this technique is basically expecting price to react off of the negative levels or your support levels and then hitting it, expecting it to hit back to your ending point. So pretty straightforward, but let's look at another example here. So take note of this zigzag shape. This is point 1, point 2, point 3 here, and then of course point 4 here. Okay, so if we are looking at it, of course, this example is with hindsight, but if we're looking at it before, we would look for this flash symbol, okay, before it reaches the minus 27.2, and then we place this Fibonacci retracement level and then project it to either firstly minus 27.2, and then we can see it breaks out, and then we will go in for buy towards the minus 61.8. Okay, we can see it reverse off and hit back down to this overlap level here. You can see the swing high here and another swing high here. So it's a pretty significant level, even though we haven't highlighted it yet, because multiple swing highs have lined up in the same area. So we can expect price to react off of that area as well. Okay, another example here. Once again, take note of the flash shape. Okay, it has definitely surpassed more than 50%, almost 100% over here. And then price is reacted off the minus 27.2% Fibonacci expansion level. Okay. Okay, another GIF for you. So the yellow arrow is the lightning bolt shape, and we are placing the retracement from point 1 to point 2 and projecting it to hit towards or reverse off of the minus 27.2. Okay, let's move on. Okay, so a pretty important point over here. What makes an invalid Fibonacci retracement? So this is one of the most common scenarios where we see price making a lower low, assuming that you're drawing the Fibonacci retracement from the top to the bottom. Okay, so it's making a lower low, and there are bars on the right that break your ending point. It then becomes invalid. So there are Fibonacci retracements that are negative, like we've just went through in the previous slides. So those are valid. But if we are using a retracement, okay, I'll show you guys the example here. But if we're using a retracement from this starting point to this ending point, and we're looking for a mid-range, then this area, since it breaks out of the ending point, it is no longer considered a valid retracement. Okay, so price breaks our ending point on the right, and hence we cannot use this ending point as our retracement. So we want to always remember to pick the lowest point with nothing on the right of the ending point. So similarly, if you're looking at an uptrend instead of, in this example, we're looking at downtrend. So if the example is an uptrend, obviously you want to look for something that doesn't have a highest point to the right of the ending point. Basically this example, but flipped. Okay, now let's get into the fun part, which is looking for confluence levels. So what a confluence level means is basically when there are multiple Fibonacci retracement levels that line up together. So this increases the probability of a bunch of Fibonacci retracement levels working together versus a single Fibonacci retracement level. Okay, so okay, let me zoom into the example. So if you look at the red arrow, you can kind of see a pretty obvious lightning bolt shape over here, right? So the red arrow is our minus 27.2% Fibonacci expansion that we talked about today. And then our Fibonacci extension, which we talked about last week. Basically for that, you're looking for a Nike tick. In this scenario, we're looking at an upside down Nike tick or an inverted Nike tick where the head is the gray arrow and this black arrow is the tail. Okay, so for extensions, we're looking for levels that are above 100%, which we see over here. And that lines up with our Fibonacci projection. So for projections, we'll touch a bit more on that next week. But really briefly, for projections, we are also looking for flash or lightning bolt shapes. So typically, projections can be used with expansions quite a lot of the time. So for projections, we are looking at 61.8, 78.6, and 100% levels. So in this case, we see a 78.6% Fibonacci projection that lines up with all these other two levels. You can see since we have not one, but three Fibonacci levels lining in the same area, this makes it a very strong confluence area where we are expecting price to be attracted to it, but also bounce off of the area as well, because it creates a lot of resistance when multiple Fibonacci levels line up in the same area. Let's look at another example here. Okay. So in this example, price broke through the 127.2% level. Hence, we expect price to reverse off of the 161.8% Fibonacci extension and also the minus 61.8% Fibonacci expansion levels. Okay, so these line up and give us a very strong level. Okay. So like what I mentioned earlier, we would look for a retracement off of the minus 27.2 first before going in towards our minus 61.8. But once it surpasses, then we're going for a buy towards this level, especially since, we have these two levels lining up. Okay. Yep. In our next example, here we have a minus 27.2% Fibonacci expansion, which is in blue over here. You can see the lightning bolt shape, I think. Okay, and then our Fibonacci extension, which again is the Nike tick, which is the purple arrow. Okay, in this case, it is also an inverted Nike tick. And then we also have a 100% Fibonacci projection, which is 3 points. So the starting point is here, middle point here, and ending point here. And those three levels all line up in the same area, which gives us this very nice confluence area where we can expect price to bounce off of this very strong support level. So one thing to keep in mind is that these tend to be areas instead of levels. So you can see even though our 127.2 is not exactly lined up with the minus 27.2, it still counts because we're looking for areas here. So as long as it's kind of near, it still counts as a confluence area. Because you can see here, when you have such a strong area, right, price is more likely to bounce off of it. So you want to make sure that you are able to catch that 1 or 2 pips before it reverses off. So that brings me to my next point, which is trade management. Briefly talked about this just now, when we were talking about the Forex Army website, because this chart is taken from there. But basically, this trade management technique helps you to make sure that you catch any reversals before it happens. Because those, like I mentioned over here, for example, you can see it doesn't really, it's just the wick of the candlestick that touches these levels. The actual body of the candlestick doesn't even touch it. So you want to make sure that you catch these levels before they reverse off of them. And this trade management technique helps you with that. So firstly, you want to make sure that your stop loss is placed beyond a key Fibonacci confluence area. Reason for this is because more often than not, price is attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond the level, chances are you will most likely get stopped out before the market reverses. And that's one of the reasons why people wonder why they got stopped out right before the market starts to reverse, and they might start complaining about stop hunting. Okay. And for your take profit, rule of thumb is to place your take profit before your key Fibonacci confluence area. Again, the reason for this is because when price reaches the Fibonacci confluence area, there is a high chance that it won't be able to go beyond of it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. So that's one of the reasons why people complain that the market might be manipulated, because they miss their take profit by 1 pip. Okay. Okay, that's it for our slides. So now we're gonna go into our live analysis session. So if you guys have any requests for any charts that you guys would like to see, feel free to pop them into the chat. Okay, I'm just gonna open my charts while you guys pop your requests into the chat. Okay, to get the ball rolling, I think I'll just start off with gold. Okay. Okay, sorry about that. Had some technical issues. Um, let's go ahead and get started with gold first. So let's look at our weekly time frame first, just to get an idea of where prices are headed towards. So we can see that gold is pretty bullish. Okay, let's see if we have a channel. Okay, not really. Okay, but we can see that prices are headed upwards. Okay, even though there are no trend lines or trend channels. Okay, let's look at our daily time frame now. And firstly, our first step is always to look for any trend lines or trend channels. Okay, just to see if we have a general direction. And you can see that price is moving within this ascending trend channel. So just to recap really quickly, what makes a valid trend channel is if there are two touches on top and two touches at the bottom of the trend channel. Okay. Okay. So let's go in and look at our support and resistance levels. So here will be my first support, and here would be my first resistance. Okay. Okay, so typically we will follow trend and we can see that price is bouncing off of the um, trend channel. Okay, so following that trend, we are expecting it to hit towards our first resistance. Let's look at our 4-hour time frame now. Okay, on our 4-hour time frame, our first resistance would be a little bit closer to where price is at, which is over here. And you want to try and pull it back as far as you can, just to see if you can spot any significant levels. So here, I'm pulling it back all the way here so that I can see that I have one swing high and two swing high here. Oh, okay. Okay. So that's our first resistance. And I think our second resistance will be here, since it is a double swing high. Okay. Let's go in with some Fibonacci levels. Okay, so starting off, um, let's go in with a projection. So this is my starting point, middle point, and ending point. Okay, and for projections, we use 61.8, 78.6, and 100%. Okay, so I'm just going to have all of those levels first. Next, I'm going to be taking a retracement because I want to see if I have any levels that line up with our projection, which you can see that is over here. Okay. Okay, so this is going to be a intermediate level. Okay. because that's exactly where price is at currently. So we might be seeing some resistance here since we have two levels lining up, and this is also a overlap level. So overlap because there is a swing low as well as, so actually we have a couple of swing lows as well as a couple of swing highs. So it is a pretty significant level. Okay, and gonna be using another projection level. Okay, and that supports my first support level. And okay, let's see if we can find any expansions. Okay, so earlier we mentioned minus 27.2 and minus 61.8 are the levels for expansion. And you can see that, oh, so this is our lightning bolt shape in case you couldn't see it. Okay, and I can see that I have a minus 27.2 that lines up with, let's see. Okay, it doesn't line up with anything. Okay, but my minus 61.8 lines up nicely with my second resistance. So I'm still going to keep this level just in case price um, bounces off of that level. Okay, but for now, we are going to see price testing our intermediate resistance first, and we're expecting it to continue to move up towards our first resistance. Now let's pull out some indicators to support our analysis. So price is on our Ichimoku, looks like price is moving within the cloud. So if it moves within the cloud, it doesn't really tell us much. Although it does look like it's moving, it's exiting out of it if you look at the wick of the candlestick. But before that happens, we can't be too sure. So I'm going to remove that. Okay. And for our MACD, you can see it's giving us a bullish signal. So that's good. And if we look at RSI, okay, price is also moving in an uptrend. So that supports our analysis as well. And on our stochastic, it's also an uptrend. Okay, and let's maybe look at Bollinger Bands. Okay, it's not really telling us much. Moving average. Okay, price looks like it's moving above both of the averages. You can see the red wick is starting to move above our green EMA. Okay, so that also supports our analysis. Okay, so that's for gold. I think we have time for maybe one more chart. Okay, let's go ahead and look at the Aussie dollar. So on our weekly time frame, uh, it looks kind of bearish, okay, with price moving in this descending trend line. So again, just to recap, what makes a valid trend line is if there are at least three touches on the line, which you can see we have over here. On our daily time frame, mm, it also looks kind of bearish, even though we don't have any um oh, actually it's currently breaking out of this descending trend line. Okay, so we have a really nice trend line over here. Okay, 1, 2, and 3 touches, and you can actually even fall over here. You can see price recently broke out of the descending trend line. So there is a bit of a bullish signal over here. Now let's just go ahead and add some support and resistance levels again. Okay, so this is my first support. Second support. Okay, this will be my intermediate level because we can see there's 1, 2, 3, 4 swing lows that line up with that level. Okay, so this is my intermediate resistance. Okay, and over here is my first resistance. Okay, now let's look at our 4-hour time frame. Okay, now you can see on our 4-hour time frame, it looks significantly more like there's no real trend. Okay, it's ranging here. So that's why it's important to look at the higher time frames first and then zooming down to your lower time frames. Okay, here will be my first support. Actually, maybe here instead. Okay. Because it's closer to where price is currently at. Okay, and next will be my first resistance over here. Okay, going in once again with our retracement level. So I like to just look at all the Fibonacci levels first. Okay, and then see what matches up. Okay. So for projection, we use these 3 levels. And you can see they kind of line up nicely. Okay, I think my 50% kind of lines up with um my first resistance. Okay, so I'll just keep that. Okay, just a recap. Here we have, this is an example of a Nike tick. Oh, where is it? Okay, here. So you can see the head of the Nike tick here and the tail here. So in this case, we can see price testing the 127.2 level, but ultimately it did break out of it. But yeah, just wanted to show you how to identify the shape. Okay. Um, okay. I think that's all the levels that we have. Um, okay. I think that's all the levels that we have in this case. Oh, let's see if we have an extension here. Okay, so we can see the minus 27.2 lines up with the 127.2. But that's a bit far from where our price is currently at. So I'll remove that. And I will also remove this. Okay, just so that it's not so messy. Okay. Okay. Now let's look at some indicators. So price is moving below the Ichimoku cloud, so it's giving us a bearish signal. Actually, it's moving within a cloud, so we can't even use that. And for our MACD, it is giving us a bullish signal, which supports our analysis. This is my first resistance. So we're expecting price to go from our first support. Maybe there will be some resistance over here at an intermediate level. Okay. Let's briefly see if there's any levels that line up. Okay, my 23.6 is quite close to where we are looking at. Okay, for our intermediate level. Okay, so we might see some resistance over here. Okay, let's look at our RSI and stochastic. Okay, they're both not telling us much. Now let's look at Bollinger and MA. Okay, Bollinger isn't telling us much. Price is moving above our SMA, so in the short term, it does look like price is going to move upwards, but it is moving below the EMA. Okay, but you can see that price crossed over here when price started to make a downtrend. But now that it's making an uptrend, we might be able to see this crossover. So basically, when the EMA and SMA cross over, it is a signal that the trend will change. So we might see that soon. And yeah. Yeah, so for this, we might see some resistance here. Okay. But ultimately, there is quite a bit of upward pressure that could push it past this resistance level here towards our first resistance. Okay. Um, do you guys have any questions? Any other requests? All good. Okay, great. If there are no other requests or any questions, then that's it for today's webinar. Thank you guys so much for joining me, and I hope you guys found it helpful. Have a great rest of your week, and I'll see you guys next week. Bye, everyone.